What's up, YouTube? This is your mask investor here on Trading Edge 4P. If you'd like to join my journey from $500 to $1 million, please subscribe. You can also follow me on Twitter as well. Just a reminder that everything we do here is for entertainment and educational purposes. So without ado, before I go into details in terms of our portfolio here, the broker that we use to do our trades here is called Wealthsimple. We call it the Canadian version of Robinhood. Zero fees, zero commissions, as long as you stick with Canadian stock exchanges. There is a referral link below. If you'd like to join, by all means do so. There is a benefit that we will mutually gain if you trade over $100. So without ado, let's go into deep down in terms of our portfolio itself. As you can see here, our portfolio has grew from 2 stocks to 4 stocks. I'll explain that a little more in detail afterwards. Overall, from the beginning of $500, we have grown about 3.53%. Which is not bad for less than a month, as we are entering week 3. As you can see, I do have some referral income here, which is a good boost for helping me ramp this up a little more in terms of our income. So obviously, first and foremost, as you guys noticed, the first most important thing is our Barack Obama of our stock portfolio. Barrick Gold has gone down in terms of holdings from 90% to about 45% of our portfolio. Why did I do that? First and foremost, I love Barrick Gold. It is a great stock. But our holdings on Barrick Gold is significantly overweight. We had about 90% of Barrick Gold in our stock portfolio. If I get lucky, basically, and it just skyrockets, the portfolio skyrockets. If I don't get lucky, and it just tanks because everyone else is into everything else, this will tank as well. So by hedging it this way, we at least have multiple fronts to fight. So I have sold about 7 holdings of it. We did gain about 50 cents per share, which is not bad actually. We also gained some dividends on this, which hasn't shown up yet. That usually gets paid out. I believe it was supposed to get paid out on the 15th of December. In terms of Barrick Gold, I've talked about this last 2 weeks. It is the stock to hold going to 2021 with all the uncertainty, the inflation, currency printing due to stimulus. It is the safe haven of all stocks. I believe this will skyrocket, especially when we are at the downturn of the price of gold being at its bottom and rebounding. There are a lot of people out there. I do follow a lot of YouTubers and try to get some information, feedback, and so forth. There are some of them that are also recommending Barrick Gold, especially Canadian ones. I am with them with this recommendation, although I have been the one that's on this for over the last 2 weeks, hence why you saw my portfolio was heavily loaded with Barrick Gold. But I won't take credit for it. This is just how I view things. Maybe others might view things differently, but hey, we'll go in terms of what we have here. So the other thing that we did on our portfolio here is we sold Aphria shares. Aphria is basically the marijuana company that I kind of like on a portfolio. A lot of people like Aurora. I just don't like the fact that they did a 10-for-1 reverse split. I'll stick with one that is actually pretty decently operated. They have cash flow and so forth. So Aphria is one of the stocks I like. I also like Canopy, but obviously Canopy is really expensive. So we gotta stick with lower end stocks due to the fact that we have a limited cash supply. I sold my Aphria stocks. Basically, I rolled the wave of the marijuana vote in the House, the UN, and so forth to decriminalize all of this. All these votes are gone. The next vote is for the Senate itself. Unfortunately, the U.S. Senate is controlled by Republicans. They're not going to vote for this. Nor are they going to even hold a vote on it. So obviously, the stocks won't really skyrocket. If you believe in cannabis-infused beverages, by all means, buy it. I do somewhat believe in it. I just don't think it's going to grow as exponentially as what people say. My price target still stands on this stock, but obviously it's a 12-month price target. I don't think I'm going to wait 12 months for it to hit that price. I could probably buy other stuff and maybe revisit this in the future to hold it on a portfolio to grow. So, but other than that, short term, I don't think it's going to be growing as fast, and I need this to grow as fast as possible short term, so I could reach the $1 million goal, or at least to have at least a decent amount of funds to basically start building an actual decent sized portfolio and have better holdings. So basically, the first thing that I had decided to purchase in my portfolio is the one and only Enbridge. Enbridge is a great stock. I love Enbridge. Many people do actually hate Enbridge. It's a pipeline stock. Everyone thinks pipeline equals to oil. Oil is pollution and so forth. Actually, it's more than that. They basically transmit natural gas, oil, electricity, and so forth. Enbridge has a goal of being carbon zero by 2050, which is great. They want to be environmentally friendly. They also transmit green energy as well, which is also helpful, that a lot of people aren't aware of. So why did I choose Enbridge? First and foremost, it is completely devalued. It's down about 15, almost 10 to 15% from the top. It also has a crazy dividend on file, and better yet, I'll show you guys this here. They even increased dividends this year. One of the rare things that the company would do this year is raise dividends during COVID, but they did. 26 consecutive years, they raised it by 3% this year, which is already insane, as their dividends has already been over 7% from what I see here. There are a lot of people, like I said, I follow YouTube a lot. A lot of people have talked about Barrick Gold, but there is some YouTubers as well that try to say, oh, you know, this is these are the top 22 dividend stocks, best stocks to buy in Canada and so forth. I went through a lot of these videos. I'm very disappointed in them. None of them list Enbridge in them. They don't know what the hell they're talking about. Enbridge is one of the best companies to buy for dividend stocks. Stable company. It's not going to go out of business. It's a pipeline company. People don't like pipelines. Maybe that's why he didn't put it in. But stable income, high dividend growth, high growth itself possibly, and lots of cash flow for many years to come. So it is one that I will constantly stay on to. It will be one of the big holdings I'll have as well. As you can see here, I bought 3 shares of Enbridge. I can't really buy more as I'm trying to diversify my portfolio. But later on, as I do get more cash, I will probably buy more shares of Enbridge. As I indicated, it is probably one of my popular shares for dividend growth as well as for actual growth, as it's already undervalued. So this is one of the shares that we bought and stocks that we bought here. The next thing that we bought here on the portfolio is TD. In terms of TD, why I bought TD? Because there's potential for growth as well. If I were to have a long-term portfolio in terms of stocks and banks, I would probably stick with RBC, or ticker symbol RY, as you usually try to stick with the biggest companies and the ones that are obviously the most stable. In terms of this year, banks, it's not really the most stable thing to be in, as they already regrew up to its potential. And obviously, 2021 might be a very difficult year for banks itself. But hey, I'm trying to diversify my portfolio. TD might be its exception. CIBC would be another one. But obviously, I don't have enough to afford CIBC, as those shares are also over $100. The benefit and decent why benefit decent. The benefits of why we're taking TD. If I had the chance, I would probably take CIBC as well. TD has the benefit of being able to acquire assets in the U.S. TD has grown significantly this year because of its American asset. More people know it as Ameritrade. It is a stock brokerage. Obviously, stock trading has been extremely popular due to COVID-19. And that's one of the benefits that TD has. Obviously, this year of COVID, banks are restricted from increasing their dividends. Banks are also restricted from purchasing their stocks again. So obviously, with the extra cash flow that they have, obviously they keep it aside for contingency purposes. But obviously, with the extra cash, some of them might acquire assets. So basically, TD might acquire some assets in the U.S. CIBC was another one I was contemplating on, as it has the ability to acquire assets in Latin America, as it does operate there as well. But we'll stick with the lower price one, and the one that we feel is most keen in our portfolio, as we have followed a lot with the U.S. stocks, just that we're using Canadian stocks to follow the American market. The last stock that we have purchased on the portfolio itself is a little different than what we usually buy. It's a real estate stock, a rate stock. There were 2 that I was contemplating on. As you can see here, one of them is BPY, which is the one I actually purchased. The other one is REI, which is known as Ryokan. Why I have decided to go with BPY and not Ryokan? That is a great question. A lot of people are hyping Ryokan. It's one of the best rate stocks and so forth. I somewhat agree with them. But due to the uncertainty and so forth of RioCan, I decided to stick with the biggest player that I'm aware of, which is Brookfield. What is BPY first off? It is a real estate stock. They basically earn income on rent. Rent obviously is not the best income as of now. Not many people are renting or have the money to pay rent. Difference is BPY is a significantly bigger company than RioCan. Do know that BPY is a subsidiary of the actual parent company, which is Brookfield Asset Management, which is a crazy conglomerate. And basically, if BPY has financial problems, you can always get money from the parent company. But in this case, I don't think it'll have financial issue. BPY could probably pay its crazy dividend rate. I believe it's over 8%. For probably 10 years or more. It just has so much cash flow. It's ridiculous. Another thing that I picked BPY over RioCan. RioCan CEO, I think he came out in April. He said that they won't cut dividends. Came out recently, said they will now. I don't like it when they say one thing and then they do something else. So obviously it's kind of a pullback on me on trying to invest in them. It's a great company. Long term, it's a great hold as well, but I think BPY is a better hold as well. The other thing that I like more is quarterly income compared to monthly income. In the end, it's all the same if you think about it. Monthly income basically give you a dividend amount divided by 12. BPY, instead of giving it divided by 12, they divide by 4 as they pay out per quarter. It just means bigger bulks of payments in each quarter, whereas RioCan, they pay out per month. In terms of our portfolio, like I said, it makes no difference if it's monthly or quarterly, as we don't have something called DRIP, Dividend Reinvestment Plan. So it makes absolutely no sense, because if we did have that, monthly payments would probably be better, as we would grow significantly more. In this case, I believe that by investing in BPY, it gives us a little more leverage to sell the stock after dividends, if we're a little up or not, to look for other opportunities, if not. So it is a better value. It is a highly more situational in our portfolio than RioCan. Like I said, I'm not here to talk down about RioCan. It's a great stock. It's a great rate. Just not in our portfolio itself. It's just not the optimal solution in terms of what we did here. So let's go in terms of our picture. Here it is. Brookfield Property Partners. So I did buy one share. It's not really much, just one share. Can't really afford and fit anything else in our portfolio. I believe I have about $8 left after all these purchases. We'll look and see if I can buy penny stock. It is another way of increasing our income. Penny stocks are basically stocks that are less than $1. Some people consider penny stocks less than $10. There's a reason why it's called penny stock. It's less than $1. It's in pennies. So we'll try to see if we could find one and put one in a portfolio. So if it does grow, at least we'll have some sort of decent sized growth as well from a penny stock. You never know, you might have found a gem or not. And if you do at that moment, we reap the rewards of this gem. But as it stands, I'll have to do some research in terms of maybe what penny stocks there is. We don't have the luxury of having SPACs or all that stuff in the US stock market. So we do have to deep down dig in terms of our own stock exchanges. There are a lot of gems in there. There are a lot of stocks that do grow crazy as well. But it's just a little more digging. So we'll find it and we'll go from there. Obviously, hopefully by next week, week 4, we will grow our portfolio. And hopefully by then I'll have found maybe a penny stock or a dollar stock to maybe throw some of that $8 or more. If I do get some referral income, I will thank you guys as well. And I'll probably invest a little more at that moment, as referral income does not go against the $500 deposit, which my friends did challenge me on. So that's it. So if you do guys have any questions, comments, by all means, let it be known. I'll try to answer you all, and we'll talk again next week. Have a great day. Bye.